Welcome to another session of our Savvy Startup learning course. We're so excited to have another lesson with you today. I am joined by my colleague, Imran. Imran, thank you so much for being here with us today. Truly appreciate you taking the time to be here on this lesson with us.
Absolutely. Thanks, Tony. Thanks for having me.
Absolutely. And we're excited to be able to share some information with you today on a very important topic when it comes to building business credit. Now, up until this point, we've had a lot of different lessons that we've covered a lot of different topics on. We've talked about selecting the right business, working from home. We've talked about getting your organizational structure set up. We've talked about taxes. Well, what we're going to talk about today is assuming that you've gone through a lot of those steps already, and now you're at a point to where you have a functioning business, or at least a business set up. And we want to talk about the money component of that business. And so today we're going to go through this process and we're going to be discussing business credit and how that applies to you as a business owner. Now, we're going to talk about business credit and how that compares to your personal credit and how they're actually not the same thing. Many people, as they start a business, they don't realize that business credit and personal credit are actually two separate credit scores altogether. They don't operate the same way. They don't function the same way. However, there are overlaps. They do work together, but they are separate. And how it's important as a business owner to be aware and attentive to both your business and your personal credit. Now, the first question that we want to address is, what is business credit? Well, when it comes down to it, what business credit is it's the process of essentially building a credit score for this business that you've now started. It's basically going through and establishing a company's credit worthiness and its ability to borrow money. You see, just like you do in your personal credit, the more you work on your personal credit, the stronger your personal credit score is, the more likely banks and lending institutions are willing or likely to give you money to work with. Well, in the world of business credit, you have to do the same thing for your company. And so your business, as you establish your credit worthiness, your credit score as a business owner, your business can become more lendable or bankable, meaning banks are going to be more inclined potentially to give you money. And that's definitely a good thing, because when it comes down to borrowing money as a business owner, it's going to be important that you take these steps now, so when the time comes that you do need the money, that you have access to it. Now, you may be sitting there thinking, man, I just started this business and I need the money now. Well, that may be the case. So it's that much more important for you to start taking these steps now so you can be prepared as time goes on. But ultimately, as your business grows and expands, as it scales, you bring on more employees, you need to buy more equipment, more products, when you need to pour more money into your business, this type of credit worthiness and lendability is going to be imperative to the growth and establishment of that business.
Tony, that's a great point. And I wanted to ask you a quick question, especially because now we're talking about starting this process now. So I wanted to see, and I'm sure you'll get into this later, but just from a high level, how long should I expect, or a business owner expect, to basically be able to set up a good business credit and then be able to use it long term?
That's a really good question. And I'm glad you brought it up, because one thing I don't want to imply is that this process happens overnight, because it won't. Just like building your personal credit or even fixing your personal credit doesn't happen overnight, business credit doesn't happen that way either. And whether you're just starting your business right now or you've been an established business for years, one thing that you must understand is that this process of building business credit is not an automatic process, and it will take work and effort. But if you're dedicated and you're actively trying to get these things put together, you're actively going through these steps, you can see your credit's foundation that we're going to talk about today start to solidify and improve fairly quickly. And so whenever we work with clients, we set an expectation that if you're really dedicated to the things I'm about to teach you in this lesson with Imran, typically minimum of 3 months is what you want to set kind of that expectation around for establishing some form of credit history and credit visibility for your business. But the reality is it's probably going to take you between that 3 months on the low end to 12 months of that first year of your business to actively be engaged in using credit and establishing credit for this new business. So whether it's a new business or an existing business, that time frame may not be, it's not uniform across the board. It's going to be kind of a unique situation depending on who you are, where you're at, what your business is doing. We'll also have to look at, your personal credit in the process, but typically between 3 to 12 months is what you're looking at to establish this initial business credit for a new business. So thank you for asking that, Imran. That was a really good point. Now, I do want to touch on this. We've kind of talked about this already, but there is a difference between personal credit and your business credit. So your personal credit, this is based off of the FICO system. So this is the Fair Isaac company. This is an algorithm that establishes your credit score. It's a privately held company. They're tracking and monitoring all of the activities of your credit, of what you're doing with your money. And that will then dial into a score. They give you a rating on your personal credit score. And that personal credit score is typically between 250 and 900. The higher that score, as you know, the more lendable you are as an individual. So if you have a credit score of say 720 and higher, that's considered really good, and you tend to be able to borrow more money. You get it at better interest rates. You can borrow it for longer periods of time, and so you just have a very strong credit score. So you want a high personal score. The three main credit bureaus are TransUnion, Experian, and Equifax. And so each of these are independent private companies that are also tracking your scores independently, which is why you'll find that all three of these scores many times are not the same. Sometimes they're off by a few points. Sometimes these scores are off by a lot. And it's because they all use different algorithms to determine your credit worthiness. But also, the information about your credit score is not reported to all three the same way. So I'll give you an example. We have a client that came to us where they had two scores that were up in the 700s and one that was down in the 500s. Well, the two credit bureaus that had the 700 or higher score were not reporting on a collection that was on the third credit bureau. And so the third credit bureau is looking at a collection, which is a negative mark on their credit. And so it brought that score way down. And so there will be some discrepancies from one bureau to the next on the personal credit. And those items that show up on your personal credit will bleed over into the process of building your business credit as well. So you do have to be aware that as a new business owner, your personal credit is still a factor in the process of getting business credit, even if they are totally separate scores and a totally separate reporting process. But when it comes to personal credit, it is tracked to your social security number. So you're given this number at birth. So whether you like it or not, your building or your credit score is either building and growing and getting stronger or diminishing and going lower, depending on how you engage with your finances. Are you paying your bills on time? Are you not carrying high balances? How long have you had that credit? These are all the factors that go into building your personal credit score. Now, in the world of business credit, this is actually going to be a totally separate score. So instead of using your FICO score, lending institutions will look at your Paydex credit score, which is like FICO, or the Dun & Bradstreet number, or it's called a Dunce number. And this is on a scale of 0 to 100. So separate score, separate rating. You'll even deal with different credit bureaus. And so, there are, when Experian and Equifax have an entirely different business division for tracking scores for individual businesses, as opposed to the ones used for personal. So one thing I do want to note is that when you start your business, whether it's an LLC or a corporation, that business is not automatically registered with these business credit bureaus. So these business credit bureaus don't automatically know your business is open and active and something that you want to be reported on. So it does require some engagement there. And we're going to talk about that in just a minute. But one thing I do want to point out on this slide before we move on is wherever you're at with your personal credit, it is also going to reflect on the business side of things. So, we have a lot of clients that will come in and say, well, man, I may not be the best on my personal credit. I've got maybe a low score. Does that prevent me from building business credit? The answer is no. You can still build a credit profile for your business, which is separate from yourself personally. However, when you go out and start applying for cards, they're going to need in many cases, a personal guarantee, which means they're going to look back on the personal credit. So your business can start establishing credibility, even if your personal credit is not ideal. However, there are going to be some things that you have to navigate through the process to actually get access to some of these different types of lending. And the more sophisticated the financial tool that you're looking to borrow with, credit cards, loans, lines of credit, they will look at all factors, business and personal, when it comes down to this process. Now, here are the core steps that we're going to dive deeper into in the following slides when it comes to building business credit. And you may recognize a lot of these points from previous lessons in our Savvy Startup course. Okay, so if you want to dive deeper into any one of these, I am going to recommend you go back to some of the other videos in our course and take a look at those, because we go into detail in a lot of these in some of these other videos. But some of these core steps, first and foremost, we need to have a legal entity set up for what you're dealing with. It's hard to build business credit for a business that doesn't exist yet. So you will need to set that business up. We're going to talk about lender compliance and what that means when going into banks or lending institutions and what they're looking for to improve your chances of borrowing money. We're going to talk about the business registration, meaning that business you set up, who you register it with to establish a credit score. We're going to talk about getting the funding and financing. And then finally, we're going to talk about using that funding or financing for your business in this process. So our first core step in building business credit is this. We need you to set up that legal business entity. Now, I'm not going to spend much time here because we have multiple videos on choosing the right business to set up, whether it's an LLC or a corporation. We have a video on getting an EIN number, which is your employee identification number. But this EIN is what the lending institutions are going to be linking to build your business credit instead of your social. And we need to make sure that all of these documents are filed correctly with the proper channel. So with the federal government, with the state government, this is going to be an important part of establishing credit, because again, we can't build a credit score for something that doesn't exist. So step one is make sure the company is set up properly, filed properly, so it does exist. Once that step is taken care of, we can now move on to step two. Okay, so step two is lender compliance. Now, whenever we talk about compliance, a lot of times people's eyes glaze over and they're like, oh my gosh, I can't deal with this. Well, this is an important part of building business credit, because when you go into any sort of financial institution to borrow money, they're going to have an initial list of boxes that they're just going to look to check to make sure that you meet initial requirements to see that you're a legitimate business. Now, I can't tell you how many times we've talked to businesses that have gone in to borrow money and immediately turned away because they didn't meet these initial requirements of lender compliance. And they're pretty straightforward. In fact, we already have videos on some of these topics as well. But just to give you a brief overview of what banks or lending institutions are looking for, just from a simple initial checked box standpoint, if you can accomplish these items, it can dramatically increase your chances of future borrowing opportunities, because you've simply gone through and established yourself as a legitimate business. You look more professional. So first and foremost, they want to make sure that you have a phone number that is used and dedicated for the business. Banks don't want to open up an opportunity to, or if they're going through the underwriting process to lend you money, they don't want to call you up and only get your cell phone to where you have kids crying in the background, the dog barking, maybe you're at a rock concert, and you've just given them your personal cell phone number. It doesn't look terribly professional. So what they're looking for is a dedicated business line that they know they can reach your business at to make them feel more comfortable when it comes to lending you money. Same thing for an address. They want to make sure that you have a legitimate address for your business. Now, some people work from home. That's okay. Some people don't want to use their home address for their business address, so they can also get a virtual address for the business. Also okay. It just can't be a PO box. So you need to have some sort of actual address, whether it's a physical location, brick and mortar for your business, your home address, or even a virtual address. That's something that they will look at in the underwriting process. These institutions also want to see that you have a legitimate website with legitimate emails, domain names are set up, and more specifically, the email you give them matches your domain name. So one of the red flags with banks is if you submit an application for business lending under your email, let's call it Tony, at gmail.com. Well, it's a free email address, and Gmail is not the problem. What they're looking for is they're looking for an email address that matches the domain. So they're going to be looking for Tony at advancedtaxgroup.com or Imran at savvycfo.com. So those are the types of emails that they're looking for. The email matches the domain on the website. You will want to open up a totally separate business bank account so you're not commingling your funds. We talked about this on some of the tax videos in the series. You want to get a business license. So all of your business licenses that you are required to have for your specific business will also need to be secured. Also, another video in our series. And then finally, we want to make sure that you're consistent. With building business credit, if you use a different variation of your name in any one of these applications, it can spin off into a whole new file for your business. And that just leads to confusion. We see this a lot in the world of personal credit. Let's say, you have a situation where dad's name is Peter and he names his son Peter Jr. or Peter II. Well, that creates a lot of confusion with their personal credit files. And there's always something that's overlapping with the other. You can create the same thing with your business if you have any variation of the business name in the process. We want to make sure that stays very consistent and you fill out these applications the same every single time. Step 3 of the core requirements for building business credit is going to be registering your business with the credit bureaus. Now, we talked about this earlier in the video. We need to make sure that you let these credit bureaus know your business exists. You filed an LLC. You have an EIN. And so you'll need to proactively reach out to Dun & Bradstreet, Experian for Business, Experian for Equifax. You'll need to let them know that your business exists, register with them. That then gives them the green light to say, all right, this is a business we can track and report on based off of what they're borrowing, whether it's credit cards, lines of credit, loans, anything along those lines.
So these Experian for Business, Equifax for Business, I know for my personal credit, I can actually access their websites as well as some apps where I can see my activity, my credit reports, not only just buy them from, my different credit cards as well. Is there something similar for the business side?
So that's a great question, Imran. And I'm really glad you asked that. The answer is yes. All of these different services, whether it's Dun & Bradstreet, Experian, or Equifax, do have portals where you can access information with them once you've registered. However, I'll make 2 points here. Number one is going to be Dun & Bradstreet is a for-profit business. And so they will elicit some strong or aggressive sales tactics to try to have you sign up for their services. And so just be aware that may come up. We're not an affiliate with them. We're not pushing that you should sign up with them, but it is an option. Okay. If you wanted to see everything in one place, you can go to a website called nav.com, NAV.com. And this is where all of that comes together, where you can see kind of an overall view of all of your business's credit scores, your paydex score, all of the above. So that's a great resource, also for profit. So there is a fee to that. So just be prepared for some sort of a membership based off of the amount of access you want to see when it comes to those services. Now, once you've registered with those bureaus and you have access to all of that insight when it comes to your financials and your scores, this is when you can then begin to start applying for funding. Now, this process, like I had mentioned earlier, can take anywhere from 3 months to 12 months, if not longer, depending on what you're doing in your business, how long it takes to go through lender compliance and registering your business, what your personal credit score looks like. But ultimately, what happens is what we're trying to do here with establishing your business's credit foundation is create a foundation of reportable credit to your business that you can then use and leverage to then secure more credit down the line. And so initially, you're going to start looking at small credit cards, small trade lines of credit. You're not going to be looking at huge amounts of money. What we're looking for is some diversity. We're looking for multiple cards that are going to be reporting on a monthly basis that you can use even to the smallest degree. And so I'll explain what that looks like. But ultimately, a solid business credit profile typically looks like something like it will have 6 to 10 reporting business credit cards, and typically anywhere from $30,000 to $50,000 of revolving credit accessible to the business. Now, this does not eliminate your personal credit again along the way, and that will be a factor that you're looking at. But everything I'm talking about here will be reporting to that business we're talking about. So let's assume you have your business set up. Let's assume you are lender compliant. Let's assume you've registered with the business credit bureaus. You're now at a place where you can start securing some funding. So what we would recommend is once you've achieved that level, apply for 2, maybe 3 cards in the business name using the tax ID number or EIN number, using the business name, all of that. What happens, these cards can be from your local office supply store like Office Max or Office Depot. They can be from Home Depot. Maybe it's the Apple Store, Amazon. All of these types of organizations, massive companies, offer credit to new businesses. They have business cards that they will offer you. These are the types of cards that you can then start applying for to start establishing a credit foundation. So to make it easy, I'll give you an example. Let's say you start with an Office Max trade line of credit or a credit card. It's a credit card that they offer in the store. Okay. Well, my guess is as a business owner, you will have some need for office supplies, whether it's a printer, maybe it's just simply a ream of paper or pens, calendars. Maybe you need to buy a new desk and a chair. If you get that card with the business information, use that card and pay it off, what you've begun doing is establishing payment history, credit history. And so what we would recommend is, even if it's as little as buying a ream of paper for $5, what happens is you can buy that paper, pay it off early. We suggest that you pay it off 10 days early before the due date. And what that does is that gives you a very positive mark on your business's credit. Okay. And you can do that with each of these cards. Okay. So once you've done that, let's say once you get those first cards over the next 30 days, use them and pay them off. The next round is when you can then get another 2, 3, maybe 4 cards, depending on what your personal credit allows. And you repeat the process. You go through and put $5, $20, $100, whatever it is that you need to operate your business, use those cards and then pay them off early, 10 days early if possible. Because what you're now doing is setting a repeatable pattern over the next couple months of you use the card, so there's usage, you pay it off early, and if possible, you pay it off in full. And so what that's doing is that's establishing very positive credit history in a repeat process. This is what we're trying to accomplish with our clients, to establish a really strong Paydex credit score that then lends you to the ability to get more sophisticated funding when the time is right or when you're able to accomplish that with all factors considered in that process.
That's very interesting, Tony. I guess how do you, there's a lot of people out there that are very concerned with having too much credit or too many cards. And potentially when you're going through this process of building your credit, applying for cards and then maybe getting declined for 1 or 2. How do you navigate that process and what is the impact of that on the credit line?
Well, that's a great question. And I'm glad you brought it up because, again, when a client goes through this process, you have to consider what your personal credit looks like. because we don't want you to apply for 2, 3, 4, 5 cards if you're going to be declined, because those negative decline marks will show up on your credit score and have a negative impact. And so it is a process. We never want to rush this if we're concerned about the approval process. And so first and foremost, I'll always suggest, if you're going to apply for a card and you're concerned about where your personal credit is and your ability to get approved, a simple call to these lending agencies, or say, for example, if we go back to the Office Max example, a call into Office Max to say, hey, what are you looking for an approval? Like, what do you need that score to be? And so you can call these cards before you actually submit the application so that you have more insight into whether you're going to get approved or not. And so if you call in and they say, hey, we need your credit score to be 680 or above and you're at 590, there's a good chance you're going to get turned down for that particular card, and you can just simply not apply for that one. Try another agency, try another store that may have different requirements that do then allow for you to have some sort of approval. And so that would typically be the way that I would suggest addressing it from that standpoint, so we don't rack up a bunch of declines in this process. And if we need to extend that process out to where it's one card this month and you don't do another one the second month, and then one more card 2 months from now, you can slow that process out and extend it over time. So you're not trying to condense everything down into a few months. It just may take a little bit longer, but it's safer in the long run for your credit score. Now, the last step in this process of building business credit is going to be seasoning your business. Okay. Now, what we mean by that is exactly what we were talking about. Constant or continuous use of that credit. So you're always building that long-term credit history profile. If you get the cards and then you just never use them, you miss a key component of the utilization of those cards that actually builds a stronger credit profile for your business, making it more bankable or lendable. So that's going to be the long-term aspect of that. And the more you use it, the longer and stronger your credit will become. Now, over time, you're going to see that some of these cards that you get early on may drop off, but you'll hopefully be replacing them with more sophisticated credit. Now, that does wrap up business credit today. In summary, we're talking about making sure your business is lendable right now and in the long run. There is a difference between personal and business credit. And those 5 core steps are setting up your business entity, making sure it's compliant, registering with the business credit bureaus, getting the funding, and then using that funding over time. Now, this is a key part to your business. And, it's an important part when it comes to, kind of tying in a lot of these videos we've looked at over this video series through Savvy Startup. Now, there's a lot of videos here. There's more to come. If you haven't already watched all of those other videos leading up to this one, we highly encourage you to jump back in and see those videos. Or if any one of these topics have stood out to you along the way, we encourage you to go back and watch those. Or if you've missed one, go back and watch it. But again, thank you so much for joining us on this video. I want to thank Imran for being part of this video with me as well. Thank you so much for being here, and we'll see you on the next video.